Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 4th. I'm Eric Wilkinson. Yeah, you might recognize me as the Wolfman from mainstream media, but what I'm here to do is teach you guys how to implement options into your portfolio. But please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with some economic data. Across the pond, not a whole lot to see there. We did have a couple of Fed governors speaking. That's here in the United States, but let's talk about across the pond, I guess. I got a little ahead of myself. We are talking about ISM, PMI yesterday. Well, across the pond, they have their own PMI numbers, and that comes in the form of flash. We still haven't gotten to any of those metrics necessarily. So let's move on to the economic data here in the United States. We've got our trade balance that came in at negative 54 billion, expected to be negative 54 billion. That's been a big thing with these tariffs, is how that's going to affect the trade balance. Doesn't seem to be a major difference in what was expected there. Then we also have a couple of Fed governors speaking today, and the Canadian bank rate. One thing, though, that's going to be really important today, all right, is not only all of these Fed governors speaking, but the beige book. The beige book isn't very widely looked at, but if you are into the econ aspect of how the United States is going to be performing, the beige book is going to be one of those things that you need to look at. Why? Because it is what the FOMC looks at. Well, some people might be saying, no, they don't look at the beige book. Well, you're right. They do look at the beige book. It comes out today, all right? And in a couple of weeks, when the Fed convenes, they get something that's called the blue book, and it is up to date. Whereas if they were looking back at the beige book, you know, it's already a couple weeks old, right? It's not as pertinent to them. So they get a book, the blue book, which is similar to the beige book, but it is more up to date, and nobody else really gets to look at that. So that gives us a precursor to what the Fed is going to be looking at. But other than that, we got Bullard and Evans speaking today, which could be something that is more market moving. Bullard was speaking earlier this morning, and, you know, he was talking, you know, at the end of the day, he was talking like, why aren't futures really the predictive value for what interest rates should be, in my eyes? He's saying that the futures are pricing it in, so we need to follow suit with that, with maybe even a 50 basis point cut. All right. So the future, you know, it's like, is the dog wagging the tail, or is the tail wagging the dog, really? And that's the big conundrum going on right now with the FOMC, to be quite honest. All right. So enough about the economic data. Not that there was a whole lot to look at there. More along the lines of what the Fed governors are going to be talking about. All right, crude oil, we've got moving higher again today, or actually higher today. Yesterday we were down, obviously, but up $2.50. That purple line is really not going to be acting as support and resistance anymore. I think it's actually becoming the point of control, where we've talked about it, where most time and volume has been spent. We can already see that the volume is there, the time is a little bit lower. Look, I got my pen working again. So this purple line that we've been talking about here has kind of lost a little bit of its oomph, if you will, because you could see in the past we've started acting as support and resistance there along the lines. But the more we're trading around that, you can see we're peeling back and forth through this rather easily, okay? So that being said, you can see that because we're peeling back and forth, it's not acting as much, and it's building up the volume in and around here. Time will follow suit. I believe that we're going to see this paradigm shoot a little bit higher. It's not really what I would like to see, but as the market is accepting value at these levels, that moves the paradigm a little bit higher, makes it more difficult to get us down to that lower level that I've been talking about. I think is good for the economy. All of those things being equal, I don't foresee us really, especially with some of the economic data we've been getting here, there's not going to be the demand to facilitate higher prices above $60 for at least very long if it were to go up there. So I do see us kind of banging back and forth like I've talked about, and building up more of a bell curve kind of like this as we kind of trade back and forth here. It's going to build in this volume and time and create more of a nicer bell curve rather than having, you know, the bumps that we have going right now with two different points of controls. Okay, so that's what I think is going to start happening there as well. Then we move over to gold futures. It's moving higher, up $6. You know, we could be looking at a 16 handle there in the gold futures. Bonds starting to move a little bit higher today, only by about 3 ticks, but we are near the highs as these Fed governors are talking about lowering interest rates, and the tail is thinking they're wagging the dog. Like, wait, we got them talking about a 50 basis point cut now? Well, we want more. And then they might start pricing that in even more than what was currently expected. As you saw with the VIX coming off a little bit there, with the Dow Jones up over 200 points today, and the NASDAQ up 99 points. Big moves happening today, you know, and right now, recently, these 100-point moves, which used to be a rarity in the NASDAQ, are something that is more commonplace as the people that are really battling between whether we're in a good economy or a bad economy, and good news is bad news and stuff like that. It's been bouncing quite dramatically, holding on to a little bit of that volatility we're seeing in the VIX, albeit it's down a little bit. We are holding on to some of that value in the volatility region for our options. So again, we haven't really gone anywhere despite the fact that we're up 100 points. You can see this is still within a value area, the high volume node up here. You can see even though we get up near this 77.65 area in NASDAQ, which is another 50 points higher, let's, you know, round it off, that's just going to come up to the resistance of that Fibonacci, the 78 Fibonacci. And again, I believe that we're probably going to see it maybe come back down. I don't think that we're going to get a massive move to new highs anytime soon without great economic data today or tomorrow. We just only have crude oil inventories, some factory orders. We do get our services for the ISM, but services doesn't really dictate overall economy health like the manufacturing sector. And then Friday we get the unemployment number, which will be probably the biggest market moving economic data point we get this month. All right, E-mini S&Ps up almost 30 points. Again, not going anywhere. We haven't even broke above the 50-day moving average or the Fibonacci there. So we are nearing value area highs, which usually we start seeing a little bit of a momentum shift. And as you can see, it's happened before. I would expect that going forward. I don't think there's enough economic data to really bust us out of this trend. So I think, you know, until maybe even Friday is going to be the real determining factor. If that number is wildly off than what is expected, that is going to be really what gives us our directional move going forward for the rest of the month there. All right, E-mini S&P is on a daily chart. You can see overnight inventory very long. No real attempt to flush those guys out, which leads us to believe to more bullishness towards the end of the day there. I just don't think there's a whole lot of volume to support a big move or a breakout, because if we go much higher, we need to really start breaking out of the pattern that we've been in, which is very sideways. And I don't think that there's enough behind what's being said with the Fed governors or the economic data at this point, as a lot of people are getting ready for that non-farm payroll number or the unemployment number, which is what we used to call it on the floor. All right, let's get on to the trades that I've done without further ado. And with Procter & Gamble, you know, this has been in a nice trajectory, as you can see, staying within a nice band. As you can see, I didn't draw very well, but you get the idea. We're staying in a nice band. That is a nice steady move higher. We've gotten our corrections as the weaker hands get out, but it's continuing. We've held on to volatility quite nicely here. It's up in the upper 50s, so that's good. As we continue to rally, I think we'll see some of that stuff come out of there, some of that volatility come out of this. So I wanted to play this to the upside, get some more positive deltas because I believe the economy is doing well. I think we're going to continue higher here in a lot of these more bellwether stocks. And so I went into the September, sold the 117 puts in there for 51 cents. So I'm still outside the value area with those puts, you know, but with my collection and everything else, excuse me, getting on all of a sudden. Sorry, you guys aren't boring me. I'm probably boring you more than anything else. But at the end of the day, that gives me a nice swath to be wrong in order to still make money on this trade. If the volatility starts coming out, I'll be able to be successful in this trade going forward and hopefully get out of it relatively soon. That's all I've added. I haven't taken anything off. I am still looking at Qualcomm. It's looking quite nice as a trade to get out pretty soon, but I've got a few dimes to go, probably actually another 40 cents. So I'm about halfway home on getting out of that trade there. If you're following my rules on Qualcomm with a strangle, you've seen that I've already achieved one of those mandates on less than 10 days, more than 10%. I'm probably less than 10 days and closer to maybe 30%, just doing math in my head. So I'm well above that paradigm on, you know, some of the people that may be newer to options trading or have a lower risk tolerance. That would be probably your signal to get out of this for a nice win already. I'm looking to get out at 50% of my max profit. I got in about 120. Right now I'm working at 50 cent bid where my 50% would be 60 cents, right? So I'm squeezing it out a little bit more on just a working order. And I actually have that in as a GTC so I don't miss it. All right. That's all I got for you guys. Hope you guys learned something today. And if you can't take that, take it easy.